Hello, everybody, and welcome back to the Dash Trader Newsroom. Markets have made all-time highs yet again, and here we are at the end of May. Do we sell in May and go away, as they say? Didn't mean to rhyme quite as much as I did, but I certainly seem to be a poet, even if I didn't know it. My name is Michael DeGioia. I'm the Director of Education here at Dash Trader, and I'm joined by my co-host, Jill Molandrino. Jill, how are you doing?
Good, doing well. It's been a while.
I know it has been. I was bouncing around the universe, as I'm sure you have been. It's been a very busy May. We just had NVIDIA's earnings. NVIDIA has blown out earnings, and it seems there's no slowdown in the AI craze. Certainly took NASDAQ 100 to an all-time high, but then we've kind of given back some of the gains as the day went on. What are your thoughts overall about AI, NVIDIA, even semiconductors in general, as we have some kind of added tensions going on between China and Taiwan? What are your thoughts?
You know, it's so interesting when it comes to NVIDIA. And Mike, you saw trading action this week. It literally was in a standstill. I mean, it's not even like the Fed was even a blip on the radar this week, right? So it just shows how much, not even weighting in terms of its weight in the S&P or in the NASDAQ 100, but just how much weight it has in how we're perceiving who are the bellwethers of the economy, right? So if you look decades past, it was always within the energy and financial space. And then we've seen, you know, if you look at the S&P 500 gig sectors, of which there are 11, you've seen that shift where finance and energy has less influence than, let's say, tech as an example. So it's not even just the influence that it has over trading, but just the influence that technology has as, you know, a makeup of the market and the direction that the economy and jobs and skill sets are going. I also think it's going to be interesting as it relates to NVIDIA. They announced the 10-for-1 stock split. And Mike, while you and I know that that doesn't change the valuation of it, there is that perception, particularly for the retail investor set, that it's more affordable or less capital intensive to get involved in the stock. So sometimes that could potentially have influence on it as well. But, you know, the quarter was fantastic. The company doesn't see any sign of momentum slowing. And again, I think not only is that good for the stock, but it's been such a focal point for analysts, traders, investors, and I think it really indicates that the signs of excitement and the promise around AI is not waning. We have seen, since you and I have spoken last, looking for other areas to trade besides the stocks that have exposure to AI, and this is how we've been covering it on Trade Talks for at least the past 18 months. Where are we going to get the energy and power resources to execute on all of these tech plans for coming on board, right? Yep. So you've seen how, you know, there's been rotation into energy. You've seen rotation into utilities. It was the best performing sector.
Yeah.
Right? So I think, you know, investors are looking for other areas outside of the pure plays. And that's why I think we're seeing some broadening out within the market. You know, consumer having a really tough time there, you know, relative to the impact that they're seeing from, you know, the macro picture, particularly with the, you know, the lower and higher ends of the spectrum, kind of that shrinking of the middle class and their ability to spend. So I feel like this year.
That with Target, right? I mean, Target.
Right, we saw that with Target, and we saw, you know, Walmart's a different story because it does have the pricing power. However, they're starting to become more competitive with their pricing, which is where Target has not been as much, and that certainly has impacted their bottom line. They had, you know, look at what happened to the decline in their revenue. But I think, you know, for 2024 versus 2023, the way that the market's digesting earnings and the way breadth is broadening out, it's not so reliant on just, and again, NVIDIA is a different case, but we're starting to see investors think about different areas to put capital to work. And a lot of it is in relation to the AI trade.
Yeah. I mean, from my perspective as a trader, you know, I look at trends, and I've been watching certain stocks for many years. Like I would have said 2 years ago that Apple was the you know, so goes Apple, so goes the market. I would say that potentially that has kind of decoupled, and now Apple is not so important to the market, but a company like NVIDIA might be the one that's taking up, the spot where Apple might have been, or another tech bellwether might have been. You see NVIDIA, kind of making a breakaway gap. They're announcing a stock split. Apple a couple of years ago did its stock split. Then Apple has kind of petered out since then. You see, there is a trend that a company does amazing. They become totally dominant in their field. They become a tech bellwether. They announce a stock split. The stock split does very, very well, as it allows it to be put in people's hands. And then after that, it starts to simmer down a little bit. I'm not sure that that's the case with NVIDIA, but I do see some similarities that potentially NVIDIA might be taking the reins from potentially an Apple. From my perspective, I see, the markets like Microsoft, certainly NVIDIA. I see certain companies rising to the top, whereas Apple has kind of decoupled from the NASDAQ. It's still very important. It's just not performing quite the same way that it did in the past. And that's could be just transitory,
Right.
but that's just something
Well, Mike, we want to be careful with the word transitory. We know that's gotten people into trouble before. But
absolutely, it could be transitory, meaning that Apple might recouple to the market.
Right.
So,
but Mike, not a counterpoint to that, but when you think about investing, or if you even look through the lens of a portfolio manager, you're not benching to one stock, right? So I mean, even think about it. When I was saying before, perhaps tech is where you're measuring, the bellwethers of the economy. But even think about transports for a moment here, right? You know how the Dow's performed, where there is more transport weighting there. But if you look at it as a sector overall, I mean, this is airlines, trucking, logistics, railroads. You move people, goods, materials. They're, that's also a key measure for demand for consumer and manufacturing purchases. And things don't happen in this world unless the transports are.
They got to get moved to wherever they're going to.
So, I think you will continue to see that broadening out. Unless you're running a thematic fund, it is, it's a little bit, I think it's not necessarily thinking about it as, where am I allocating assets? Where am I allocating to sectors? But what are the goals? And thinking it more from a goal perspective versus like asset allocation perspective.
Yeah. Absolutely. I think from my perspective, just having traded for so many years, I look at, NVIDIA as they're doing the stock split because retail investors want to be able to own a piece of NVIDIA. It has gone beyond the average retail price, the price point of the average retail investor, putting it back to $100 or roughly $100, puts it back in the potential portfolio of the retail Main Street investor. It's something similar that happened with Google recently. It's something similar that happened with Amazon recently, or not so far in the distant past. So NVIDIA seems to be maturing as a company. That's my view of things. Now, let's go to time of the year. We know the sell in May, go away trend. The sell in May, go away trend is a end of May trend. We are here at the end of May, basically. The markets are at all-time highs. And now today, the Dow sheds, more than 500 points. Is this a good year for the sell in May, go away trend? Or is it, just that the market's so high, it's profit taking? What are your thoughts about sell in May and go away this year?
It's interesting, these sayings that we have on Wall Street, honestly, Mike, they only perform, maybe half the time. It just, I think it's more of an old adage than anything else. Right. And, the market certainly evolved since these adages have come into the vernacular. But I don't think this was necessarily a sell in May event. I mean, the market did hit all-time highs during the course of May, whether it was at the close or, we're just talking about Dow 40,000 last week, right?
That's
so
up 12% for the year. Most people don't feel that. That's not the opinion of most people, but so far the markets are up. The major indexes are up about 12% for the year.
Right. And Mike, it is so interesting. I think we're going to get towards this in terms of consumer and investor perception later, but that's a great point that you've brought up, and something that we've been really talking about over the past month or so, how portfolios and investments may be doing well, but again, we're in an election year, so more of this is just being spewed at people. But the other day on CNBC, I think it was actually yesterday morning, Wednesday morning, Axios did a poll and they were reporting on it that over half people that were polled think unemployment's at its worst level than it's been in 50 years. It's at 3.9%. They think we're in a recession. So there's a big disconnect in terms of perception. And I think the challenge with that is, yes, in many cases, there are areas of the economy such as rent, housing, insurance, where it's 22 to 25% higher than it was in 2019 pre-COVID, right? And even though inflation might be, I'm using round numbers here, 0% year over year, it's not what you were paying 4 or 5 years ago. And even if the Fed cuts, housing isn't going to come down that much. Your insurance rates aren't going to reflect that. I don't know anyone who's gotten a 22 to 25% wage bump unless they have moved jobs or significantly advanced in their career. So that's the perception. And then when you think about consumer good companies, right? And this is anecdotal, I think a lot of it is clearly they have to make margins happen, right? And then they're using inflation as the backdrop for it, when in fact, production prices have come down. Things have come in line since COVID. So it's almost like these raises are being blamed on inflation, when in fact, when you kind of dig underneath the surface, it's the ability to expand margins. And I think that's very deceptive for the consumer.
Yeah, I think that the consumer perceives a different reality than what the market is. The market's up 12%, but people are feeling pressure because housing prices, consumer products, they're all higher. Even though they say the inflation is not as high as it is, it certainly feels that way to the consumer. And also there have been some layoffs. I mean, certainly unemployment is seems to be at all-time lows. Although I don't think people quite feel that way. So there's like a disparity between perception and reality, which is it might just be the media, it might just be the way people feel. It's very interesting because that's the next slide. Overall, what would you say was the reality of earnings season this year? What was the overall trend?
The trend was 70 to excuse me, 70 to 80% of companies beat. They were decent. However, I think there was a lot placed on how well companies did with revenues, what the balance sheet looks like, what they're doing with their cash, whether they're investing in R&D or there's doing more stock buybacks. We've seen a number of tech companies initiate dividends. So that was kind of an outlier there. But guidance was really the key thing here. So I felt as if you beat the quarter, but your guidance wasn't as good, or if assets weren't being allocated to where investors think they should be going, because if you're not investing in R&D and you have billions of dollars on the balance sheet, where are you getting your future growth from? So I think companies that were rewarded had strong guidance. They're putting money to work. They're investing for the future. That's what initiates forward returns if they're investing in the right areas. So I think those are the companies that were well rewarded, as were their sectors.
Yeah, so I would totally agree. I've seen that overall earnings beat expectations, and that the one area that was consistently a problem was forward guidance. I look at these stock buyback programs as kind of a smoke and mirrors gimmick. It's like, yes, it's going to positively affect your stock, but you're doing it in a way that really doesn't provide you any real rewards to your company. You're better off investing in R&D, et cetera. But it has been a trend, and generally, if you've mentioned a stock buyback, usually the company does very well on earnings when they mention stock buybacks. It's kind of a gimmicky way to kind of get good results from an earnings report.
Right. A little bit of, obviously, I'm going to call it financial engineering, but
it is. It's smoke and mirrors to a certain extent, because you're reducing your supply of shares.
But do you think when a company is buying back stock, that it indicates to investors that the company and the board think that their stock is attractively valued and there is room for growth, or they just have nothing else to do with cash?
I think my opinion is they're not doing it for any reason but to get a good reaction from the market. They're doing it to get because the trend is that when you announce a stock buyback, you are going to get a positive reaction from traders and investors. Traders and investors traditionally respond well to stock buybacks. Now, the reason they respond well might be that they look at the stock as a positive, that it's a good investment, right? So the rationale would be that traders, investors like companies that are willing to invest in themselves and take some shares of the market. But traders look at it like they're just taking shares off the market. So you're going to have less supply of shares. So the stock would be more likely to go up. It has a positive effect on the price of the stock just from a supply and demand situation. Um, from next question, what do you see as possible pitfalls this summer as we're going into summer? I mean, is there potential I mean, this is when election volatility starts to pick up. You're talking June, July is when, as you get closer to November, the chances for election volatility increases. And this is occurring right as there's potential geopolitical problems, that are kind of heating up as well, in China and Taiwan. So far, all geopolitical problems have done nothing to affect the market performance. But what are your thoughts on possible pitfalls this summer?
I would say it's more around policy than necessarily the market itself. So here's a couple of areas that you want to be thinking about. So trade, I think regardless of who ends up in the White House, deglobalization, it's happening, right? We're seeing tariffs can mean more supply chain disruption. It could be inflationary because it forces movement into production. Obviously geopolitics and what's happening with China, and also Israel too, is going to be a talking point. Of course, immigration, they're going to be thinking about taxes. And again, it's interesting to see. I read something Eamon Javers from CNBC had put it out, I believe it was yesterday, a two-part piece on how Trump's economic policy is shaping up relative to it was when he was in office 2016. And basically, it's almost as if it's counterintuitive or the roles have reversed a bit. Basically, they're taking it from the perspective of more socially conservative, but more liberal as it comes to economics, which is kind of counterintuitive for the way you would think the Republican Party would think. But I think it's interesting. So almost from a social experiment perspective, if you have the time to read those two pieces from Eamon Javers, the way his policy is shaping up, I thought was really interesting. Deficit spending, of course. I mean, how much more money can we print and how much more money can we spend? You have to remember, student loan forgiveness, it doesn't mean the money poof goes somewhere else. It's tax dollars that fund that. So that's going to be a big talking point there. Regulatory policy as it relates to financial services, energy, AI, digital assets. That's going to be another key area to look at. Analysts will always be looking how you're going to evaluate Trump stocks versus Biden stocks as it relates to policy. And really that time period from August through October during presidential election years, that's when you start to think about it. I feel like it hasn't been clear yet. I don't know if we'll learn more from the debate that's set up in June. I'm not too positive on that, but we'll see what happens there. But I think overall, when it comes to manufacturing, semiconductors, tech, even financial services to a certain extent. And I think, Mike, this is really interesting. My sweet spot is covering digital asset market structure and regulation. But you had a key bill passed the House this week, FIT 21, and that is basically similar to what the EU has in terms of having a framework around digital asset market structure. That's a huge move, and it has bipartisan support. And Trump, for better or for worse, was speaking at a rally how he is pro digital assets. Now, whether he is or isn't the point. The point is that he has inserted digital assets into the national conversation around the election, and it's going to be front and center. And I think that's something else you're going to want to pay attention to.
That's a great point, because that was what I was going to ask you about. I mean, how much? I mean, we see the Dow hitting 40,000. How much is the Dow hitting 40,000 that the market is just doing phenomenal, or that the dollar is just doing bad? I mean, the markets are denominated in dollars. The dollar has lost a tremendous amount of its value. You can see that evident in the price of Bitcoin and the price of gold. The dollar is losing its value because the dollar is linked to the U.S. economy. The U.S. economy has 35 trillion plus in debt, right? And then, of course, they just passed this new digital currency bill, which means that maybe the suggested future direction might be, in the direction of digital currencies. My point being is, how much is the market's hitting new highs? Is the market's doing phenomenal, or is it just because the market's denominated in dollars and the dollar is worth less?
Mike, I think that argument is longer term, but I will say, I think part of the narrative is with the market hitting all-time highs is in the beginning of the year, right? We were thinking 6 to 7 rate cuts. I did not think that was the case because if we got that many, that means the economy is in a lot of trouble, right? That's a
Yes.
lot of rate cuts.
Yeah.
Now it's grappling with perhaps nothing or 1 or 2,
Mhm.
but the moves to all-time highs have been based on fundamentals, right? What we're seeing out of earnings, what we're seeing in terms of
Yeah.
where momentum and thematics are. My question to you is, as the trader, I would imagine that it's going to be a lot of empty desks tomorrow. You're going
Mhm.
into a 3-day weekend. Do you want to have that kind of exposure? Do you
Absolutely.
think there's some stuff coming off the
I think
table?
that this is definitely, you're at all-time highs. You're going into a holiday weekend. Why would you leave money on the table? You're going to cash out today. That's the reason we have a significant move on this Thursday.
Right, because the
Everybody
volume isn't
rushes for
anything
the door.
impressive.
What?
The volume isn't like it's, like it's 1 day, right? We'll
Yeah.
see if there's any follow through, but it's not like it's massive volume.
My guess would be that we're probably going to get a bounce up, meaning that if anybody was short, they're going to probably cover their, if anybody was just trading short, you'll get a bounce up tomorrow, or it'll have like a flat day. But I mean, I think that the rationale would be is why go into this holiday weekend with exposure on the table, especially if you're up, right? If you've done well, you're at all-time highs on every major index. So the rationale would be to take your money off the table. I mean, you might as well ring fence your profits. I mean, it would be most likely that most traders that if, I mean, the direction is long, why would you go into the weekend, a long weekend with exposure when anything could happen, especially with all kinds of geopolitical events going on? So to me, I think this is just traders taking profits. That's how I would view it. So looks
Yeah.
like you and I are on the same page on this. Well, thank you so
We
much.
usually are with this stuff. We usually
Yeah,
are.
no, we've been spot on for a lot of these different things. Well, I'm going to jump to the market analysis. You
Okay.
have a wonderful holiday weekend,
You
and
too.
I'll see you in 2 weeks.
All right. Take care, Mike. Thank
Trade
you.
well. Bye bye. Have a great weekend. Well, let's take, I mean, this is obviously this is what I was just talking about with Jill. So this is today, 5/23. This is Thursday. I mean, we're already starting to see that bounce that I was mentioning about. This is the intraday on the S&P. We had a big gap up, really driven by NVIDIA's earnings. So NVIDIA being on the S&P, let's just bring up NVDA. NVIDIA gapped up and went, and then subsequently started to get some profit taking. It held the gap, so it bounced and reversed off of the gap. And that's NVIDIA. Let's see, Microsoft as another bellwether stock. Microsoft at all-time highs, pretty much staying within its range. I mean, it's been up for, well over 2 weeks. Let's take a look at Apple, as I had been mentioning Apple. I mean, you can see that Apple is not performing quite as well as the rest of the markets, but it's not performing badly. It's kind of in a sideways trend, whereas something like Microsoft is clearly in an uptrend. Google clearly in an uptrend, however, big profit taking today on Google. The one that's the more interesting is the fairly big profit taking on the Dow Jones. This is the DIA, which follows the Dow Jones. What I was talking about with gold is the GLD. GLD. Gold is pulling back as well, indicating that the dollar has strengthened a little bit. But as the dollar strengthens, that would probably lead to a sell-off in the markets. And that's exactly what we see. So as the dollar gets stronger, markets go down. Markets are denominated in dollars. Let's see oil. Oil, let's see the weekly on the daily on oil. Let's just see USO is going to be a better chart. Yeah, oil has come back down as well. So really not seeing any change in oil prices, but oil has certainly I do know that they're selling making sales from the strategic oil reserve yet again. So that's going to put down on oil prices. So generally everything is looking okay. I mean, let's take a look at something that's old economy like US Steel has pulled back a lot. GE has been on fire, but potentially a sell set up on GE after a very big day up. I mean, not really a sell setup, but potentially it needs a couple more days for fruition. We did have a crossover on the moving averages, but for the most part, markets are at all-time highs, and things look to be steaming along. Overall, I would say earnings season was better than expected. The guidance was negative. Actually, I want to look at one more chart. I'm going to go back for one more second. I want to just look at Target. We mentioned Target. TGT. So Target, there was the big gap down on worse than expected earnings. They said that people weren't buying as much, home goods and not purchasing as much grocery store items in Target. So Target, Target, it's pretty much a good gauge for middle class America. Needless to say, let's jump back and finish up our newsroom for this week. That's it for market analysis. We're going into the Memorial Day weekend. I wish everybody a wonderful Memorial Day weekend. Stay up to date with all things DAS by signing up for our monthly newsletter and emails. Simply fill out the form at the bottom of our webpage at www.dastrader.com. Subscribe to our YouTube channel at Dash Trader TV for our newsroom reminders. Follow us on social media at DAS on LinkedIn, Twitter, Facebook, and Instagram. I wish everybody a wonderful, wonderful Memorial Day weekend, and see you next time. Trade well, everyone.